Well, hey, everyone! Hope you're having a great day out there as always. Hopefully, you're having a good investing day as always. Yep, having good gains. My name is Warren Howe. Right, shout out to you from Malaysia. Yep. So we're back at it. We're back at another week of looms. So today's topic, I want to talk about why not investing is the biggest risk. So those of you that have already invested, that's great, right? Great for you. You've already been invested, let's say 3 years and over. That's great. If you just started off, within a year, it's still good. It's never too late to It's never too late to invest, right? Obviously, the younger the better, but yeah, it's never too late. So let's talk about um, you know entrants, right? New people who are just starting their investing journey, who has 50,000 ready to go, or 10,000, right? 5,000 ringgit, or USD, whatever it is. Now, why I want to talk about this is because this is crucial. This is crucial, especially during like a huge bull market run that we have seen in the US market specifically over since 2020, after the huge liquidation, right? After the huge crash because of COVID. Because literally, members have been asking me, members in the group have been asking me, Warren, I just started investing. Should I keep more cash? Yep. Should I keep more cash? Should I have more money in equities, right? Should I buy more stocks? I feel that keeping 40-50% cash is a dumb move. So I'm getting a lot of this. Now, this is why I want to address, right? Because not investing, right? What are your other options if you were to choose from any asset class out there other than stocks? You got, your savings account, checking account, whatever it is, your fixed deposits, your, bonds, right? Government bonds, 10, 30-year yields are, below 1%, 1.5 below 1%. In Malaysia, the fixed deposits are at 2 to 3% per year. But that's not good enough. Inflation, if you work out, long-term wise, right, over 70 years, it could eat up 5 to 7%. The key thing here is that not investing is the biggest risk is because we are missing out on opportunity costs, opportunity gains. Yep. So, and if you have been in the market long enough, like how I have, you will know that getting a 20% or 15% gain is relatively easy, provided that we execute all the strategies in play. If you have been following up on a particular stock long enough, if you have been following up on doing up a thesis on them, your analysis on them, a bullish reason or growth catalyst for you to invest on them, ultimately you will make it, right? So not investing is the biggest risk is because we are missing out on these opportunistic or thematic play or long-term gains. Imagine if you have been holding, and these are companies that are literally just started to pick up their pace ever since 2020 or 2019. If you got companies like Square, yep, companies like Celsius Holdings, companies like Tesla even. Imagine holding, within a 2 or 3 year time frame itself will give you huge exponential growth, right? In your returns and reflecting in your net worth. Now, over here I got, the S&P 500 index. Yep. And people are, new members who just started investing, they've been asking me, Warren, the S&P 500 has been going up, up. It's greedy. Should I just hold on to cash? Or, should I just wait it out until there's a crash and come in next year or, next 2 years? So here's the thing. We never know when there'll be a crash. In a year, there will be tons of reasons to reflect, to cause a crash or a slight correction. It could be, okay, suddenly markets are overvalued, big money is actually selling. It could be, countries going to war. Then they'll be selling. It could be earnings are not good as before, then big money will be selling. All in all, there'll be so many and because companies are actually seasonality, because of the holidays, then certain companies won't be earning as much. But if those are, companies that are actually beneficiary of, during the holiday season, then they'll be going up. My point is that there are opportunities everywhere. It's all for us to grab them. If I look at the S&P 500 right here, yeah, it has been a huge bull run after March 2020 or even September 2020. But should we not, should we time the market? Should we really ask ourselves, okay, what are the opportunities out there right now? What are the obscure stocks? What are the growth stocks? What are the undervalued stocks? What are the stocks that, okay, I have my funds there in 5 years, for a 5 year time period? What is better? What are the stocks that I can actually buy, sleep well, not affecting my current emergency funds or my savings? Because at the end of the day, if you invest in stocks, it's not going to generate, monthly cash flow for you unless you use other strategies. So if you have that in place, then investing is the best way to go because you're investing in a good growth company over the long term. Yep. So I gave this example, and I literally, I sold my house, back in Malaysia. I sold my house, right, which was my very first house 8 years ago. It's an auction property. It's an auctioned property. Yep. I bought it for 330. I sold it for 465. Now, if I work out the ROI, okay, and I held it for 8 years, by the way. Okay, so 8 years. If I work out the ROI, my return of investment, I have gotten around 4.8% per year over the 8 year period. Not too shabby, but still, it's a little lower than inflation if we were to factor it long term. That's number one. Number two, what if I was buying growth stocks and I was just holding all the way? Yep. Instead of having my money parked in there. So whenever you want to do an asset class comparison, you want to work out your ROI in its investment lifetime. My strategy before I bought the house was that I'm going to hold it for 5 years, maybe even 10, because the rule of thumb is to double, right? But Malaysia market is not the best when it comes to property, especially now. Why am I sharing this? Is because not investing in good growth stocks or high quality stocks that is best in class, good pricing power, we will miss out on huge gains, right? Easily 500%, 1000%. Now that's a long-term point of view. We can even zoom into what we have been discussed recently, right? Let's talk about a company called Square. A company called Square, if you have been just into the market, like let's say this year, which is January, right? So January will be around here. Okay, you have built a thesis on them. Yep, you have known that, okay, this is a company that I want to be holding long term because they are actually they are very disruptive in nature, right? They are replacing banks. They want to be a bank, but a bank that actually solves problems, not create more problems, right? Solving delay issues, helping small businesses. They got Cash App. User adoption of Cash App is huge, right? So I'm giving all these examples because, essentially Square, for me personally, is a great company to hold. So let's say you bought in at, 205. Yep, you like the valuation, you like where it's going to go, you bought at 205. My point is, imagine if you had that money into, just savings, you would have missed out on a potential, 30 to 40% gain in a matter of 6 months, 7 months, 8 months. That is a perfect example. Now, you could tell me, hey, Warren, what if, you're just looking at stock prices. What if you tell me that I bought in Redfin ever since January and I'll be losing money, I'll be losing 15%. That is true. But are you holding on to a business for the long term? And what is your horizon? You could compare that within a 1 year time frame, you would have gotten 2% from your savings or your bonds or whatever it is, compared to a minus 15% or 10% within the time frame. But here's the thing. The potential for this business to 5x or 3x in 3 years' time or 5 years' time has more potential. The chances are more You get what I mean? Then compared to putting your money in a fixed deposit or a fixed rate in 5 years' time. You see where I'm getting at? Because you are believing in this business. Now, obviously, the other trick is that which business to invest in. But you are essentially investing in a business that has potential to, earn better, so that the stock price will reflect the earnings in the future years to come. Yep. So I hope you got some value out of this today. This is one of the longest looms I've done. Okay. Why not investing is the biggest risk is because we are missing out on opportunity gains. Do your thesis, analyze properly, get your evaluations done, get your buy plans, sell plans. If you are interested, contact me, right? Give me a DM. We can actually get you into groups. We can actually get you into coaching programs, right? If you're new in the market, don't be, right? We'll go in a handheld process along the way. The community is awesome. So I'll see you in the next one. Thank you.